was a highly anticipated address by the central bank governor on Friday. That was a summary. Definitely much more, was said that day. Joining us for analysis now is Mr. Paul Alaje, senior economist, SPN Professionals, joining us right here in the studio. Great to have you on the show. Good morning.
Good morning, and thank you so much for having me.
So definitely the governor had a lot, to talk about. He did joke, about spending 5 minutes less, with his speech, and I saw the audience actually cracked up at that. But he did definitely have a lot to say. I want to get your key takeaways and also what was not said.
Well, Mr. Cardoso understands that the city occupies is really very sensitive, and it's one of the major drivers of the economy. And I think he has decided to now take the driver's seat. You remember that I spoke with you, I think, last week regarding the meeting that did not hold. We were expecting that the committee would meet. If it is to hold the rate, we would know that, yes, there is certainty. Now, what seems to be a concern of many of us who are economic watchers and active participants in the economy is the silence, which, of course, was not becoming golden. He has spoken, and it's as though our assumption was that rate was held, and he was able to say that. He also said something to what appears to be his vision, and I think by extension the vision of Mr. President, $1 trillion economy. That's an important step we must take. I've now noticed that he's taking steps towards achieving it. So unlike what we've seen with the previous central bankers or the Apex Bank lead, where they just make visions, they write paper, they make presentation, but there are no active steps to making these actualize or making these a reality. Cardoso seems to have taken a different step by saying, yes, this is where I put my mouth, I want to put my money on it such that I can achieve that which I want to achieve. Again, he has also presented himself as somebody who is, I want to assume he may not talk as much as many people may expect him to. But in all of those, when it comes to monetary policy, there is a time to speak, there is a time to be silent. And I hope that when the time to speak comes, it will speak and speak to the issues and also make policy to speak to the issues, right, to solve the key problems that we're expecting as a nation. Right.
Definitely. And he did harp a lot about inflation. He talked about this inflation targeting, framework. And definitely, most central bankers have targets, for inflation. I believe our target is around
between 6 to 9%.
6 to 9%, and we know in the U.S. about 3%, at this time. So, talk to us about this inflation targeting framework.
Well, for me, I think Nigerian inflation targeting framework, it will go beyond what monetary will do. Fantastic idea he tried to roll out there, but I must tell you that I have a lot of doubts, like I've always said, if this targeting will work, if we don't have that convergence. When you look at the real driver of this inflation, it's food inflation. And central bank before now, we do money to the farmers in the name of anchor borrowers program, among other things that the central bank have tried to do to ensure that there is that reduction in the level of food scarcity we have seen in the economy. This central bank is taking a detour to that. Is not going to make that kind of monies available to farmers, quote and unquote, directly through a transfer payment of some sorts to the farmers. That is not what we are going to see. So how exactly are we going to reduce inflation? I've seen what Mr. Cardoso have adopted as policies since he came to office, open market operation. He's been selling bills and bonds, in the market such that it can mop up excess liquidity. That was the way Governor Emefiele started, selling bills and bonds, mopping up excess liquidity, raising interest rates. When that happens, watch out what the Bureau of Statistics will publish if they are not using their 1 hour, which of course I've made my opinion known that for African or for developing countries generally, the level of poverty, hunger and deprivation, the quality of money in those countries, it is not right to use an hour a week to measure employability. The minimum that should be used is 20 hours. And the National Bureau of Statistics agree completely. They said we are giving it as an option. There is an hour, there is 20 hours, there is 40 hours. Use the one that suits in the circumstances. But because they work with some international partners, it's possible for them to publish an hour, to publish, just to play the devil's advocate, that there are no disparities. But all of those data are there. All of those data, they are there. Now, here is the issue. If we are using inflation targeting that does not resolve the real issue, we will find ourselves in a place where any global economic quagmire, we have effect on us, and that is why we landed here. We have witnessed COVID, we have witnessed Russia-Ukraine war, we have reached fluctuation in global oil prices, and all of these things are having effect on us. You know, the economy appears to me as a toddler. Wherever they kick, it goes, and anytime anyone dangles anything before the economy, it runs there. It's tackled me as a lot of inflation at over 27%, as against what the central bank is targeting at 30%. Of that number is actually what we are targeting as a nation. So, but we've not been able, we are now seeing more than ×3 of our inflation target. So, Mr. Cardoso, we need to do beyond that. It would need to work with trade authority. What many business people, many economists seems not to talk about, even government, when it comes to key macroeconomic variables, is the role of trade authority. And in Nigeria, the way we have done appointments, I think since 1990 to date, is to have someone just manage Ministry of Trade and Investment. But what is the target for trade and investment? By how much has our exports increased? By how much are we also helped with import substitution? These are issues and these are things that we must do as a people so that we can reduce pressure on the central bank, because when central bank wants to say it wants to fight inflation, that did not cause, and the money, excess money supply is not the real reason why we are having this issue. It's like carrying the load of the whole world on one leg. Meanwhile, the leg should be 3.
Right. All right. Let's talk about the other big one now. That's gone. That's over with this leadership. Talk to us about the benefits, you know, from the previous leadership, from the previous interventions, you know, that we saw in the agri sector, manufacturing, you know, all of that, and tell us if it should actually be stopped.
Well, I must say, as a practitioner, of course, in one of the areas where government intervened, even though I did not apply, because I want to maintain a clean record deliberately, I did not apply for any of government for, name it, Hanko Borrowers Program, COVID Fund. I did not apply for anyone, so I didn't get. So, and I'm not saying people did not get. I just don't want to be involved in it. But when you look at it, the intention of government under President Buhari and the former central bank governor was very clear. The intention was to help people, was to help farmers, is to use the third hand, which of course is now visible, because you have invisible forces, demand and supply. So use the third hand, which of course is the government hand, to induce something to happen in terms of supply, such that the demand eventually will be tamed, which may lead to reduction in inflation and all of those. But what actually happened? Corruption. The biggest elephant in the room in our country, as we have known it, and I can say since the late 70s to date, which of course became entrenched in 1985, which is corruption. It became perhaps an identity of some sort. So government says it was going to support from wheat to rice to so many things. The question is today, with all the humongous amounts, billions of naira, millions of dollars that was provided by the government as support in different sectors, do we have scarcity or not? Does it mean that the monies that were given, they were not properly invested? That's the answer, by the way. Because when you do proper investigation, you see that some of those money have been diverted into real estate. You see that some of those money were not properly integrated into the system.
And I heard one time that some of the farmers married new wives.
Of course,
with most of those funds. I don't know how true that is.
No. The information is out there.
Right.
And when you go to what the farmers have done, you see that not just the farmer, there are corporate farmers. You know, we are talking of that one affected rural farmers.
Right. I'm
even talking about corporate farmers, farmers in time farm who use their 5 kilometers but made fantastic presentation, but went away with some of the money. And perhaps that is why the central bank is coming up with this. But you see, for every economic decision, I wish this were to be a snooker balls. You know, you hit the white ball when you are breaking, and it can pulse the red, it can pour the other color, but pray that it does not port the black ball.
Right.
Unfortunately, when we make this policy, we need to be watchful. What is it porting? If you further raise inflation, if food inflation will further increase, because some of the life support we have now is because of those parts of the money that were actually invested. So government must come up with an alternative policy, either on the fiscal side or on the trade side, such that as central bank is saying, I am not supporting anymore what will happen. Are we going to now open our borders for influx of food and little gains we made over the years? We are not going to throw that away, because if you do that, then you can watch what will happen to your exchange rate. It's going to be completely in shambles. I said when I was speaking with your colleague in Abuja that by March you might see exchange rates go to about 1,500, and as at that time it was 700. Today, what is the figure saying? I am not saying that I want it to be. I am not happy anytime I see an increase either at the parallel at official rate, that exchange rate is getting devalued, because my life, our economy, your economy, my economy, those watching us now, those are watching future, if you are in Nigeria or you earn in Naira, your economy, don't let anybody deceive you.
It's a nightmare. It's a nightmare.
It's getting devalued. Anybody that come to say that it's a right thing for us to devalue does not like us. You cannot be working for 200, 500,000 and the worth of that money changes to 100,000, and somebody says you. Economics says it's a lie. This
those that are making dollars, because some of them, you know, they rest on that.
Yes. If I have time, I will speak to those.
You're earning dollars, so it's all good for you.
Yeah.
No. At the end of the day,
it's not. I will speak to that if I have time. So,
right.
But let me say this: if you want to destroy people, this is where economists stand. Economic philosophy. If you want to destroy people, the first thing you do is to destroy their currency.
Right.
Once you destroy their currency, it's a matter of time it will catch up with them. This is why we need to do everything possible to boost the power of Naira, either physically or using monetary tool, or most importantly, coming from the trade angle. So for those who are speculating that don't worry, once they earn their income or they have any business, they quickly change to dollar and wait for Naira to devalue. This is the foolishness in it. By the time you go back to the market, the price of things you bought before would have also increased. So why can't we work together with whosoever in office to ensure that we boost the soul of that currency called Naira? But that will not come without we producing, without we manufacturing. In fact, a conference I think was just concluded in East Africa, and what many leaders of East Africa concluded on is that the real problem of Africa, especially East Africa, is not because they don't have fantastic foreign policy or they don't even have domestic policy. Their number one economic problem is in production. Is part of the reason why you see insecurity spread all over Africa, because they said an idle hand is the devil's workshop. And the last time, if you have ever checked the devil's workshop, what he has there is not pen or paper, it's not suit or tie. What he has is machete, grenades, and anything that can destroy.
Terrible weapons.
So terrible weapons is what he has. But I'm hopeful that our economy will move from such that is currently on to one that we can boost and we cannot be proud of. As
so much to unpack there, Mr. Alaje. But thank you so much for your perspective, Mr. Paul Alaje, senior economist, SPM professionals. Always great having you on the show.
Thank you so much for having me.
Thank you. All right, we'll take a quick break now. When we get back, we'll get a sense of what to expect as CBN governor hints at bank recapitalization in Nigeria. That's our next conversation. Do stay with us.